It's Symphony. So let's straight away get chatting with Symphony. Very strong quarterly performance. The net profit is surged 65%. The revenue was higher by 47% on a year-on-year basis. And the board has also recommended a final dividend of 8 rupees per share. Nrupesh Shah, Managing Director of Corporate Affairs at Symphony, is now joining in on the show. Mr. Shah, thank you very much for joining in. Now, this quarter that we're currently in is typically the strong quarter for you, given the summer season. You've indicated that it's had a strong start, but the momentum has been mild due to the erratic summer. And that's something even what Blue Star seem to have indicated when they talk about their unitary cooling segment, that April has been a bit subdued compared to earlier expectations. So tell us how April has been and what can we expect in the current quarter in Q1? Will growth rates be similar to Q4 or better?
Yeah, so March quarter has been phenomenal. So
Yeah.
Summer started with bang. Of course, post-March, April is subdued so far, mainly on account of erratic rains and not so much supportive weather. However, due to variety of our initiatives, including adjacent category, our decent penetration across the channel as well as rural and semi-urban area, relatively we are doing better. However, YOY certainly so far it is subdued. However, as it has many a times happened in the past, still depending upon the region, 7 to 11 weeks of the summer have to go, and it needs 7 to 12 days of consistent heat in any region, and product gets sold out. So we are keeping the finger crossed.
But when you say April has been subdued, are we looking at degrowth on a year-on-year basis? To what extent? And even if things recover in the month of May and June, what could you end the quarter with, given the slow start?
Yeah, as I say, it is subdued in the sense YOY. April 24 was exceptionally strong. In fact, it was historically strong. Vis-a-vis, it is subdued, that is lower. However, we have repeatedly seen in the past, in the weeks to come, in such a large country with many, many territories, if there is 7 to 12 days of consistent heat anytime during next 7 to 11 weeks, it takes care of it. So
Mr.
we are
Shah,
all losing the nerves, and we are keeping the territory-wise temperature and sale and our variety of initiatives quite vigilant.
but are you witnessing something of that sort on ground, Mr. Shah, when it comes to, you mentioned consistent heat for 7 to 12 days that will take care of the subdued start that you've had for the month of April? We are almost into the first fortnight of May now. Have you witnessed some change on ground when it comes to your demand scenario as well? Because even take Mumbai, for example, we are currently subject to unseasonal rains as well, and the weather has just taken a complete 360-degree turn.
No, so is the case in Ahmedabad, that is our headquarters. So is currently the case in North India as well as Central India. However, say in April, in whichever part there was a consistent heat of 7 to 10 days, there were some territories. It was completely sold out. My point is, summer many a times goes right up to second week of July. Still, we have 7 to 11 weeks of summer, especially in Northern India, Western India, Central, and east part. And many a times it has happened in the past. There has been early summer and there has been early rain, and vice versa. So my point is, if it happens, we can very well reverse, and sales can be intact. We have to keep the finger crossed.
But in that case, Mr. Shah, have you set any targets for FY26? Because for FY25, you saw a very sharp margin expansion. From 15, you zoomed up to 20. Do you expect to remain at 20 in FY26 as well?
Of course, we have our own, not only quarterly, but quarterly, monthly, territory-wise and model-wise target. But that is not for public domain as per our IR policy. And as far as the margin profile is concerned, we very much expect to maintain current kind of increased margin profile. We endeavor towards that.
What are the drivers for the increased margin performance? I think last time you indicated that those 17 new products that you launched, SKUs, were margin accretive and they'd seen very strong demand. So what, to your mind, are the key drivers behind the margin performance in the current quarter? And you're saying it's sustainable.
So one, of course, launch of 17 new models. They have received overwhelming response. We have also in pipeline many new other models for year to come. Number two, economies of scale. Also continues value engineering as well as our decent penetration in rural, semi-urban, digital channel and model train apart from general trade. And during the year, apart from our core household air cooler, adjacent category, LSV, geyser, etc. have also contributed decent amount of sales. And that will continue and should witness further traction.
Just a couple of questions, if you could help with numbers. What was the contribution of the adjacent categories like geysers, etc., in the current quarter or FY25? That's number one. Two, last quarter you had very high unbilled advances, 150 crore at a record level. Is there a number in Q1, in Q4 that you could, share us that? And third, there were also provisions towards an e-commerce customer. And you had, I think, made a provision of 46 crore. What's happened on that front?
Okay. One question, many answers.
Yeah.
All right.
So first is geyser, the adjacent categories in the sales.
That's right. So adjacent category put together have contributed almost 17% of sales. And when I say adjacent category, it includes tabletop, it includes kitchen cooling solution, large space ventilated cooling, etc. And these are the products which are sold round the year. And in addition to that, counter seasonal, that is geyser as well as spare sales. So they have collectively contributed almost 17% of the sales and huge potential. They are in a way non-seasonal. Your second question was about provisioning on our
the e-commerce customer.
E-commerce customer. So the legal updates I have, we have succeeded in a very short time to get the power of attorney and have registered the mortgage in our favor on 13 valuable properties of that company, their promoter, as well as associates. So we have power of attorney and mortgage has been registered. In addition to that, there has been court-approved settlement agreement. And if the recovery doesn't materialize, there is a bailable warrant against the promoter. So we have taken in a very short time very stringent action, and we hope sooner or later some recovery should materialize. But we'll update on that as soon as we receive it. So far, we have recovered small amount, that is 50 lakh rupees.
50 lakh out of 47 crore, is that correct?
It was write-off as well as ECL provision, all put together 50 crore in previous year. Now, whatever recovery will happen, that will be as an exceptional gain because year has changed.
Sure. And so one more question.
Already booked as an expense.
Yes, I remember that. And one more question. The unbilled, I think the sales, I think it was 150 crore in Q3.
Correct. So as we had informed, large part of that was related to new models. And most of that billing happened in March quarter as it was guided. And that is also one of the reason of substantial growth in March quarter. As far as 31st March is concerned, I don't have the exact figure, but we had decent amount of advances lying as on 31st March, by and large to bill in June quarter.
What about your international business, Mr. Shah? Because generally it tends to be the high margin one, right? Is there a specific geography that you are targeting when it comes to growth? And coupling that up with the other one is that your divestment plans now in Australia, be it Mexico, are you planning on exiting those markets? Are you divesting some stake over there? And you can answer this and then I'd ask you my follow-up question for that.
Sure. So as we announced on 12th of April, we have decided to monetize and divest our Australian business and Mexican business. The purpose is so that we can focus and use management bandwidth on much more profitable, growth-oriented business segments within the country as well as exports directly from India. So that is as far as the update on those two companies are concerned. We have already appointed the investment banker and work has just begun in that respect. As soon as there is any major update, we will of course announce suitably. Coming to other international business, GSK China as well as Symphony Brazil, which is more like a trading subsidiary, but both have performed phenomenally well. And GSK China has been a classic turnaround story. And in fact, we were compelled to take an impairment on its equity as well as part of the loan because of its strong financial. In the current year, those impairment has been reversed and written back. However, to add to that, because of climate technology's past performances, as per accounting standard, auditors advise us to make an impairment on climate technology amounting to 50 crore, which has been already done in current quarter and as a year. But it's more about the notional accounting entry.
Mr. Shah, just to get back to the disinvestment bit, do you expect that disinvestment plans to materialize in FY26? Do you expect to complete that exercise by then?
That's what we intend to do. But as you know, it's a major exercise and we wish to wrap it up ASAP, but difficult to give the specific time frame.
Okay, thank you very much, Mr. Shah, for joining in and wish you all the very best. We will get into a break on that note. We'll come back and discuss commodities on the other side with Manisha Gupta.